Over on my Simple Option Trading channel on YouTube, I've been getting lots of comments, emails, and messages from individuals asking me if I could show or demonstrate how to do covered calls and cash secure puts when an individual only has a small trading account. Some folks mention they don't have $1,000,000 or 100,000 or even 10,000 in their trading account. Many of them only have 5,000 or less. And so in this video, I want to show how it's possible to do option trading with a small account. In this video, I'm going to be selling a cash secure put to generate an income from the premium payment that I collect using the YieldMax Coin Option Income ETF, symbol CONY. It's an ETF that follows Coinbase Global Incorporated and provides targeted exposure to the financial exchanges and data niche. Watch me explain what a cash secure put is in simple terms, read a chart for CONY with candlesticks and other indicators, analyze the option trade to see if it makes sense, and then I sell the option and get paid. Hi, I'm Jim and welcome to Simple Option Trading. Did you know that I host a free user community for stock traders just like you and I? Inside, the members share information about option trades they're currently involved in, along with tips, tricks, hints, and secrets about options trading. You can join for free by going over to school.com/simpleoptiontrading. I'll leave a link in the description down below. Hey, it's free. Why not join? Let's go ahead and take a look at a daily chart for stock symbol CONY going back about 5 months. And I've set up the daily chart with a couple of indicators that I want to point out. So we can see the candlestick indicators here, the red and green candles, and they tell you the price movement for that particular day, right? So green candles mean that the stock price started at one point and ended higher than what the opening was. And then a red candlestick tells you that the stock price finished below the opening price for that particular day. Now I've got the Bollinger Band marked out here. You can see the upper and lower limits, kind of this bluish cloud figure you see that surrounds the candlesticks. So that tells you where the price is. And right now we can see the stock price is trading near the lower end of the Bollinger Band, or the bottom side of the Bollinger Band. Now, the support level I have right around $6.45 and the resistance at $10.46 per share. And so this is kind of where the stock has been trading at for the last 5 months, is within this range. So as the price approaches the support level, it tends to go back up. And as the price reaches the resistance level, the price tends to come back down. There's no guarantee that the stock price will continue in this fashion, but it gives you a pretty good indicator of what's been happening with the price. Now you'll notice that the RSI, the Relative Strength Index, tends to correlate with the stock price and the Bollinger Band. So for example, if we see here where the stock price is exceeding the Bollinger Band, so it exceeds the upper boundary of the Bollinger Band, well, the RSI value is actually above 70. So that tells you that the stock is in an overbought condition. And using this information, there's a high probability that the stock price will dip to get back into this Bollinger Band range and have the RSI level, the Relative Strength Index, come back down and recover from this overbought condition. Likewise, if the stock price exceeds the lower level of the Bollinger Band, as in here, you'll see that the RSI also dips below, telling you that the stock is in an oversold condition, and that there's a likelihood that the price will move back up as more individuals purchase the stock. Following the laws of supply and demand, as there's higher demand, then the price will tend to go up as well. And we can see that here as the price starts to climb up and reaches above the lower edge of the Bollinger Band. Now what I like about this particular chart, we can see symbol CONY. We can see the stock price trading at the lower half of the Bollinger Band. It was recently in an oversold condition. And also notice that there's two areas, one here and one here, where the stock price actually gapped down. So the difference between this price here on this day and the price here, there's a huge gap. And there's also another gap here. Tells me that potentially this stock price could go up and want to fill those gaps again. And so I'm looking at a possible condition where, yeah, it's currently trading at $7.05 per share, but this stock price with these indicators, lower end of the Bollinger Band, the lower portion of the RSI, meaning it's in an oversold condition, and there may be more interest in purchasing shares, thus driving the price up, plus the fact that there's two gap downs may indicate that there may be further interest in purchasing shares and driving the price higher. So I'm going to use this information, the current stock price with those indicators, to help me decide to sell a cash secure put using a $7 strike price, because I think the price will start to move higher and my option contract will actually expire worthless, freeing up the money I have reserved for the shares. Plus I also keep the full premium payment. So the other day I was talking with my mom, explaining how I sell cash secure put option contracts in order to generate an income. Now she was nodding her head yes, but deep down inside, I could tell she wasn't 100% sure of what I was telling her. So I decided to come up with an analogy or an example to help better illustrate and explain what I was doing. And I want to share that with you now. So I told my mom, if I'm in a neighborhood and I see a homeowner that's selling their house for $510,000, well, I could approach that owner and say, hey, you know what? I'll pay you $500,000 cash if you sell me your house within the next 30 days. But in return for my promise to pay you that $500,000 cash, I want you to pay me $2,000 up front for me to reserve my money, the $500,000, for those 30 days. So this gives the owner of the house the opportunity to think about my offer, and as the prices in the neighborhood move up and down over the next 30 days, that owner can decide whether or not they want to sell me the house and receive the $500,000 cash. Now at the end of the 30 days, the owner may decide that they want to take me up on the offer, which is great. I'll pay $500,000 in cash to the owner of the home, and they'll give me the keys to the house. But remember, I also keep the $2,000 that they paid me up front when we initially made the deal. But if at the end of the 30 days, the owner of the home decides they don't want to sell me the house, that's fine as well. I won't purchase the house, but I'll keep that $2,000 that was paid to me originally because I had reserved the $500,000 for those 30 days. So at this point, my mom mentioned it's kind of like an insurance policy. She said if the housing prices dip down below to say $480,000, well, the owner of the home can take me up on my offer to purchase his home for $500,000 as long as it's within the next 30 days. At that point, I knew my mom understood. So selling a cash secure put option contract is very similar. I'm promising to pay a certain price for a stock within the next 30 days, and that price that I'm willing to pay is the strike price. Now, in return for selling that cash secure put option contract using that strike price, I'm going to receive a premium payment, which is my compensation for making that guarantee available for the next 30 days. Well, let's go ahead and run this one through my cash secure put analyzer and see what the results are. So today's August the 19th, and we're talking about symbol CONY, and it has an expiration date basically 1 month out. So I'm going to use September 19th of 2025 as the expiration. Now for this trade, I'm going to be using the $7 strike price, and I'm going to specify a premium of 60 cents per share. Now let's go ahead and look at the results. So we can see I'm selling a cash secure put for stock symbol CONY with a strike price of $7. Now I'm willing to pay $7 per share for 100 shares, so that's equal to one contract. So I'm going to specify one contract. And then an expiration of September 19th, which makes the length of this contract 31 days. Now with the option strike price of $7 per share, that means I need to have in reserve $700 in my brokerage account to hold as collateral in case the option gets exercised. And if it does get exercised, well, then I'll use that $700 that I reserve to actually purchase those shares. Now, I specified the 60 cents per share as the premium. As a result, if this option contract gets filled, I'll receive $60 as the premium payment. And that represents basically an 8.5% return on my investment of $700. So that's looking good, and it passes my profitability test. I'm getting an 8.5% return off a 30-day investment by selling this cash secure put option contract. So I went ahead and opened up the trading platform for my brokerage account, and we could take a look here at the trade history where I actually sold the cash secure put. You could see it here for symbol CONY. And I used the $7 strike price and an expiration date of September 19th. Now I submitted my order on August 19th at 6:59 a.m. Pacific time, and it was filled roughly an hour later, almost an hour later that same day, right? So August 19th at 7:46 a.m. Now when I sold the option contract, I specified that I wanted a premium price of 60 cents per share. And when this option contract got filled, I received a total premium payment of $60. So that's the 60 cents per share times the 100 shares because it's one option contract. Now that premium is credited immediately to my brokerage account, and it's mine to keep forever, no matter what happens to the option contract, whether it gets exercised or it expires worthless. Now with the option contract sold, I just need to wait for the expiration date to find out the final outcome. But in the meantime, I keep the premium that I collected, remember the $60, which gave me an 8.5% return over that 30-day period. So roughly 2% every week, which more than meets my criteria for profitability. Stay tuned to find out what happens on March 19th, the expiration date, to find out whether or not the option contract expires worthless, or if the buyer exercises the contract and I purchase the shares and add 100 shares of CONY to my portfolio. Thanks for watching. I hope to see you in the next video. Oh, shit.